All right, traders, George here, and got a couple things to show you. One, I'm looking at my oil trades specifically, and not including Monday as it was a holiday. Just over the last 8 days, last 2 weeks of trading so far, I did 3,390 here, most of it from the long side, and maybe more trades than I'd like to see there. 50% win rate, that's fine. Expectancy is pretty good. That's great. So whether you're trading live, whether you're sim trading, or whether you're just in the early stages and doing some back testing, this is something that you can do and a way that you can visualize it, which is where I'm going with this. We talked about belief building in the room this morning. Here's a real neat thing to do. And this is manually generated here. So when you get the flow of your profitability, this is cumulative profit here, all I'm doing is I'm highlighting the new lows and the new highs, and I'm coding the transition colors here in a lighter color. So what I'm getting from this is for the first 20 trades, I'm basically where I started, and 20 trades in the hole with commission. That kind of action right there is real tough for a rookie trader to get through. Very easy to say, you know what, forget this, I'm going to go do something else. But this is the flow of expectancy. I'm only doing this because I've already gone through all the investigation and I'm trading it, right? So whatever I'm doing in the room, end of moves, continuation breakouts, this is what is coming my way. This is really the breaking point right here where most traders are going to walk away, but look what happens. I just keep taking what I see, and all of a sudden I go into a nice string of winners here where I go to a new equity high here, new equity high here, first time for $1,000 profit in this look back here, and then I hit a new equity high here at 1820. Okay, euphoric. I got the world by the tail, not so fast. Here comes a nice series of drawdowns here, eroding my $1,820 down to $1,130. So a little bit of an ego check there, right? Same issues hold true as they did early on. This is enough to make somebody walk away and just continue to, do different stuff. Variable interactions with the market. Everything I'm doing here is 100% visually derived off of the chart, this guy right here. So there's no news, no fundamentals, nothing else. Actually got a good winner there to put it to new equity highs, right at the edge of the cliff where you're about ready to go back to where you shouldn't be going. Here comes some profitability. Oh, not so fast. Back to a new relative low here and more of a drawdown. So now I've got a string of what this is 68 down to 38s. So 30 trades, and I'm at a new equity low here from my new high up here and my new high there. That could be, if you're not thinking correctly, this could be something that you let sort of fester and you start having negative comments, the internal state that you have going with yourself. Trade what you see, right? Starting to dig out of the hole there. New relative high here. Here's a new equity high right there. First time over $2,500 there, up to $2,950. I hit 30. First time over 3,000 now. First time, and then a new equity high here at 32.50s, and that string continues. So a pretty nice run here of growing that equity curve, and then here comes a little bit of a haircut, pulling things down $1,000. So I gave up 30% of my gains there on whatever happened here, and then I move into some more growth with the flow of expectancy here, and I hit a new equity high here at $3,400, and then just sort of flattening out here this morning. Okay, the last handful of trades from this morning. So that's what's happened for the last 9 days, really 8 trading days. But this is what you can do, and a great way to visualize the flow of expectancy. So imagine that this is a river flowing, and there's a set visual response that you have. So when you start to trade your market, whatever it is, NASDAQ futures, mini Russell futures, oil futures, gold futures, wherever it is in the flow of expectancy for the chart type and period value, the market and the time of day, there is a flow of expectancy. What you don't know is where you're going to jump into that flow. You could jump in right here and see a bit of a drawdown, you could jump in right here and see a nice equity growth right out of the gate. You don't know how that's going to happen. So this helps you visualize this and be okay taking the next setup and signal. It can also have you looking to see what kind of drawdowns peak to valley you get and make sure that you're funded enough to withstand that kind of a drawdown. Remember, what will crush the traders that haven't done the right work is they'll get a little bit of the way in and things don't go the way they like it and they're done. And it's not just so much it's not the way they like it, it's that they don't have the responsibility behind what they're doing in the market. So if there's some losses, it's easy to say it's something else. It's the software, it's my broker, the quants know where my stops are, the markets are manipulated, all that kind of garbage. Just think about the chart, the signals that you get from the chart, right? Led by if then. If this happens, then I do this. Ongoing, repeatable, okay? How is it done? Backtest it. Scroll back manually and find the same setups and signals. Just keep going back and finding them. Put them into Excel. Then, if that looks good, you can start to sim trade it, get your feet wet there, and when you feel comfortable with your executions, then you can go live. That color coding, which I did manually there, of the peak to valley and equity growth there for the flow of expectancy, is a great drill to go through because it builds belief in taking the setups and signals, and it shows you that it's okay when you see a couple of drawdowns there. You know that the methodology has a positive flow of expectancy. So it's one of my favorite things to show there is that example, and I went through it myself over the last handful of days here. So great week and last week as well, around a traditionally not such a great time to be trading around the Labor Day weekend. That's it for now. We'll see you back in the live room.